Moderna coming in with earnings today and telling the story of a continued right sizing for the company, just getting over that big pandemic windfall from the past few years. Joining me to break it all down and more is Chief Financial Officer Jamey Mock. Jamey, thank you so much for joining me today. Tell me, what are we looking at? The results are in. You certainly have a bit of a loss to look at, but you're still optimistic about right sizing the ship to move forward. Tell us what's going on.
Yeah, well, good morning, Anjalee. Great to see you again, and thanks for having me. Yeah, so we have a lot going on. I'd say three things. We can talk about the year and the quarter in terms of what's going on from a COVID marketplace perspective. You mentioned our resizing, which we are pretty excited about what we did for proactively. And then third, we're giving quite a bit of guidance around how our outlook from 2024 to 2026. And kind of how we're thinking about operating the company. So we can touch on each one of those. But you mentioned resizing, so maybe I'll start there. So yeah, we built our infrastructure for a pandemic and during a pandemic. And we are grateful to all the many partners across the globe, raw material partners, manufacturing partners, that really helped us get through it. But as we look, the volume is just not as significant as it once was during a pandemic. Much of that was to be expected, but it's even probably a little lighter than we thought and couldn't get into the year. So over the last quarter, we went out, we worked with some of our many partners, and we ended up taking a $1.4 billion charge in the quarter. And we expect another $200 million in the fourth quarter related to the same restructuring. But that really sets us up from a cost of sales perspective, as well as a gross margin improvement perspective. And we kind of laid that out in terms of, at $4 billion of sales, we think we're 35% cost of sales or 65% gross margin. But we've always targeted, and we believe we'll hit that target of 20 to 25% cost of sales and 75 to 80% gross margin over the coming years.
Yeah, you mentioned that, looking to break even by 2026. That is a pretty short timeline. You also have a pipeline that is still maturing and advancing in that sense. I know there's several products in phase 3, but we're looking at a sort of a slow rollout of all of that and maybe one or two products additional by 2026. So talk to me about that optimism for that 2026 deadline.
Yeah, well, it's, really, we understand what investors are concerned about. And they're concerned about, hey, what are you doing from an investment perspective? And when might you break even? And we wanted to explain our thinking. So, we are super encouraged by the organic growth opportunity that we have in our late stage pipeline, as you mentioned. And we think that by 2025, we'll actually bring together RSV next year, flu the following year, our combination product of flu and COVID the following year as well in 2025. So that late stage pipeline will come and will increase our sales line, which gives us confidence. But that all said, we're also super conscious of our cash balance and the amount of investment we can afford. And we said it depends on sales. So if we hit a certain sales level, we'll invest more. But if it's not the sales that we expect it to be, we have to adjust. And I don't think investors really understood that from us, but we're fortunate to have $13 billion of cash right now at the end of the third quarter. And we said we're going to use some of that because we expect a loss in 2024 and maybe even a loss in 2026. But we're going to not let that go below $6 to $7 billion. And now our thinking is we need to. The only answer here is growth for us. So that's to get the pipeline out. And there's many more after that. We said 15 products by 2028. So that's just a bit of our thinking. And we said by 2026, we're committed to breaking even, either through growth or through disciplined investments.
Yeah, so this is definitely putting that windfall to work. You also had a bit of a tax hit. So can you explain moving forward how you're looking at the cash you have on hand, that great ability to fund whatever it is you're looking at? How are you going to allocate that? Is some of it going to be acquisitions? Are you looking at that, or are you looking entirely internally?
It's almost the majority, if not all of it, internally. And we've always been pretty disciplined about our capital allocation in three buckets. One is to reinvest in the business. The second is business development, as you suggest. And then the third is to return excess cash to shareholders, mostly in the form of share repurchases. So the first one, in terms of reinvesting in the business, that's mostly through research and development and a little bit of capital expenditures. And that's what I just mentioned. We'll continue it to be relatively high. In 2023, it'll be $4.8 billion. We said in 2024, it'll be $4.5 billion. And then, 2025 and beyond are kind of dependent upon our sales line. If it can go up, it can go up. If it has to go down, it has to go down. So that's going to be the majority of our capital investment or our capital allocation priorities moving forward. In terms of acquisitions, I mean, we've done a small one to advance our technology, but it was like $100 million. We don't anticipate doing a lot of business development. We mostly partake in collaborations with some partners to advance the science that we need to bring our products to market faster. So we still anticipate doing that moving forward, but from a capital allocation perspective, it's much smaller.
And finally, hot topic this year, AI. Moderna is already well in the way of using it. Are there any improvements that are needed there, or do you need to allocate any capital that way? And what are your thoughts on sort of the buzz around it right now? Are there opportunities for you?
For sure. And I would encourage any investor to listen to our digital day, which is next Wednesday, I think the 8th. So we'll go through all of this, but to shortcut that and give the key messages, we're super excited about AI. The adoption in our company, I think is over 50 to 60% of our employees. We measure it based upon the size of a prompt and how sophisticated the response is. And that obviously helps our research and development team bring products to market and get better antigen design and many other things. As it pertains to the back office as a finance person as well, it can improve our controls, it can improve our forecasting, our analysis. So we're really encouraged by it.
And that was Yahoo Finance's healthcare reporter Anjalee Khemlani speaking with Moderna CFO Jamey.